Hello, welcome to JSServices Strategy-Based Trading Review. Today we're going to take a look at the British Pound. British Pound was in a neutral digestive market state, and structurally the R level was below the downside pivot, so we created this price band here. So when we look at the Structure tab, we can see this unique condition where the actually extends the critical range down to the R level. We look at our market color, we're completely brown. This market is dead center neutral. So we can have some high confidence that this market is truly in a neutral digestive state, and we're going to key off these balanced bias, churning momentum, kind of drop in volatility, basically going nowhere fast expectation. So if we're in a neutral digestion market state and structure is below the market, our strategy themes optimally we're more skewed to the buy side because sentiment's below the market, so we're going to look to buy fade into support off the reversal level at 142.71, and then we're going to also accept a reversal signal. So since sentiment's below the market, we would anticipate the market to maybe make a play for it. Doesn't have to, but it's more likely to try to press it down to this level. So we don't want to step in front of the DP, and we'll wait for it to take it out, and then we'll accept a reversal signal. And our expectation will be for a rally back up to the upside pivot for a range day. If we do get a rally up to the upside pivot, we're going to look to fade it because we're anticipating the sideways digestion. The market breaks that structure, we would see price starting to hold structure above the upside pivot. That would be a tell that we're transitioning out of this digestive trade. And also if we get a failure below the R level and we start to hold negative price structure. Those are our optimal and our hedge strategy themes. So we're going to take a look at performance. This is our Sierra chart application. You can see it has our structure on it. Here's our downside pivot, 143.05, and the R level at 142.71. Here's our directional. And so as we're coming into this European session opening, the market is providing us a buy opportunity, and we can see that it broke down, made a play for the R level, which we're looking to fade into, and then they bounced back up and they price qualified back above the downside pivot. So we're going to take a look at some market metrics that surround these market structure points. So we're always watching price action within market structure, and the market structure defines the condition, and there's metrics that are associated with these levels, and those can be found in your JSServices directory in your JS sheet. And we have a few metrics. One, APMD is average price map distance, VAR is the variance, our alert distance, and our maximum stop distance. So I'm going to go over to the British Pound. So this is in ticks. The pound is trading in 68 tick price segments. Variance is 7 ticks. We have an alert distance of 14 ticks and a maximum stop distance of 30 ticks. So this feature is built into our Sierra Charts application. So I'm going to add the variance. You can see it coming in here. So you can see how we're looking for a reversal signal. So when we define a reversal, we can use these metrics where the strategy uses 3 different conditional alerts. You can either go above the variance, below the variance, and back above the variance to trigger a reversal. You can use the alert distance, through the alert distance on one side, failing through it on the other side, and then coming back up through it. Looking for entries, back off the variance or right away off the alert distance. Each different market state, one should be more aggressive, one less aggressive. Neutral digestion, you might want to use a conservative approach and use the alert distance versus a corrective state where you want to get, you're just a real aggressive and want to get back on that trend. You might want to use a shorter reversal and maybe even a hard stop, versus having a pullback. Here a digestive trade, you're anticipating more sloppy action, more stop and go. Whereas if you're coming into a situation, even a positive trending market, let's say with the R level below the market, you might want to use a more aggressive exhaustive reversal and then just use hard buy stops so you don't miss the opportunity. So here we have our variance metric. So we've taken that out, came back above it, got a fill. I'm going to put the alert distance on here as well. And so we see a couple things happening here. We also see our fade strategy coming into play. So not only do we get the alert distance, but we get our fade. A fade is the most basic strategy, so you only have one alert. Market has to be in front of the figure on a buy or in front of a figure on a sell. So you're fading momentum, and so you're always looking to fade in front of the figure You're not looking to fade through it. And typically on a fade, you'd expect it to be more in front. On a fade, you're looking for usually that positive price structure, higher move highs, lower move lows, so that you'd anticipate that fade to happen more in front of the figure than less, but you can kind of use the alert distance and variance as a guideline for any fade strategy. So we have our buy R fade. The market came down to the alert distance. It didn't quite make it to the variance. Then we price qualify above the DP. So we've had alert 1 starting above the DP, alert 2 below it, and then here you get confirmation that the reversal is in play. One thing we know about the price map is these segment moves, or average price map distance. So anytime we get into a trade, we're really looking for 1 APMD. We can break that into a half APMD to take some money off the table, and our objective is going to be 2 average price map distances. Absolutely, if you're getting involved in an R level trade, it could be much more depending on the market state condition, which would potentially produce a 3 or 4 APMD move from sentiment. So coming into the alert distance, I can put our minor levels up here to kind of show half APMD, full APMD move here. Our expectation is neutral digestion, and our expectation is the market's going to transition higher up to the upside pivot. That's our opportunity. And so we never know how that's going to happen, so all we can do is watch price action within the market structure. And so as the market comes through here, confirms a reversal, provides an entry opportunity, starts to build positive price structure, and we're just watching the market make higher lows. And if we keep that focus, we're in the game, we're in this strategy theme, it's holding positive price structure, there's no need to think of anything else. Maintain your position. Where can it go? It can transition up to the top end of that digestive range. And the market pays out 2 full APMDs. And so now we're coming into our sell R fade opportunity. A couple things about this. If we know that the market trades in segments of average price map distances, and we know that 2 segments is a good move, if the market's already paid out 2 full segments, there's the likelihood that you're going to get a rejection. At least a rejection, a half an APMD rejection, if not a full APMD. And more likely you're going to get a full APMD rejection back down to the directional. It's just normal price action. It's just normal action of price within market structure. Something else that we can do when we're looking to fade momentum is look for different events. An oscillator is a good tool to use when the market's at an extreme like this. I don't like to use an RSI when the market's in transition. It's going to give a lot of false signals, but the RSI or an oscillator looks is interesting when the market's at an extreme. And so here we're at an extreme and we're getting a overbought situation. Anytime you get a rejection outside that metric, it's giving you good confirmation that this is a valid level. And what happens here is now we're coming back to retest price, and our RSI is much lower. So here we have a market that's making a higher move high, and we have a lower RSI. So this is what's called a divergence. Again, we're always looking for the facts. Fact is we had a 2 APMD move, which is a good move. Fact is we're coming up to the top of the critical range, which is always a resistance point. And fact is one of the optimal strategy themes for the day is to sell UP fade. So we have a valid sell signal and they gave us an opportunity. And here they come and they're confirming it. And the market pays out a full APMD. And it pays out 2 full APMDs. So we had 2 strategies here that paid out 2 full APMDs. And another optimal strategy that paid out 2 full APMDs. All in alignment with the expectation of the market state. When we came into the session, our expectation is neutral digestion. We identify the structure of that neutral digestion and we see that sentiment is positive above this price point. Because we're in this state, because we have this structure, these are our optimal and our hedge strategy themes. Absolutely, it's a leverageable opportunity to buy, because that's where we're able to buy off sentiment. They provide us with a fade at the minimum coming into our alert distance, and then they price qualify and give us our reversal signal here, and they pay out 2 full APMDs coming into our fade, Anytime you have such a big aggressive linear move into a fade, it's nice to have some event happen to give you some confidence that we're not just going to scale higher. We had that with our oscillator. We had a divergence, and we get a failure which pays out another full 2 APMDs. So by understanding the state, structure, and inherent strategy themes, we're able to anticipate opportunity. And then when we watch price action within market structure, the market kept us into this opportunity, never let us get out if we just had a simple focus of higher move lows, and we didn't think that the rally was over. We didn't think they're going to stop here. We didn't think they're going to stop here. We had our 2 APMD target. We had our divergence signal coming into an optimal strategy. It got us in again. And again, not thinking, just doing, focusing on price structure. The market held price structure on the way down as well and paid out 2 full APMDs. Textbook situation for a market that's in a neutral digestive state. Sentiment below the market. We have all of our indicators lit up neutral, and our optimal strategy theme playing out, giving us higher confidence because the market's performing to expectation. For more information, please contact us at info@JSServices.com. I look forward to working with you.